Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Sidus space.
If you find our talks useful, please consider subscribe, like, and comment underneath.
So, imagine sitting on like $100 million in cold hard cash.
I mean, that sounds pretty good to me.
Right. Your balance sheet is spotless, you have zero debt, and you operate this massive manufacturing facility.
Yeah.
But at the same time, the broader market is just violently shorting your entire industry.
Oh, wow.
Yeah, vocal critics are calling your company like a quote-unquote sci-fi wish.
That is a brutal label.
It really is. And that's the high-stakes battleground we're walking into for this deep dive.
Well, before we unpack all that, just a quick note for your trading workflow.
Oh, right, yeah. If you want help reading the charts we discuss more clearly, you can check out VIP Algos.
The link is below in the description.
Exactly. It's a TradingView indicator suite, and it features visual buy and sell chart alerts.
Trend direction tools, too.
Right. And support and resistance zones, plus, take profit and stop loss planning areas.
And it's versatile, right? Like stocks, Forex, crypto.
Old indices, futures, yeah. But keep in mind, VIP Algos is it's an educational chart analysis tool only.
It is not financial advice.
No, definitely. It doesn't place trades for you, and it does not guarantee profits.
Trading involves risk, so always manage your risk and do your own research.
Yep. And just so you know, that is an affiliate link, meaning we may earn a commission if you use it.
Yeah, no extra cost to you, of course.
Exactly.
All right, so let's set the stage here. Today we're analyzing recent financial disclosures and chart data to really understand Sidus space.
We need to figure out if that massive capital raise actually buys them the runway they need.
Right, or if they're just, delaying the inevitable in a really brutal sector.
Exactly. So first, let's look at where this fits in a wealth-building strategy.
Because this is definitely not a safe income play.
Oh, absolutely not. You are not buying this for a reliable quarterly dividend to pay your utility bills.
No way. It's highly speculative.
Very. It's geared toward long-term secular trends like distributed Earth observation.
And defense resiliency, right?
Yeah, which requires a specific mindset. You have to be comfortable locking your capital up for a multi-year horizon.
But I have to push back a bit because defense resiliency sounds great in a press release.
Sure.
But aren't space stocks just a massive incinerator for retail capital right now?
I mean, the graveyard of space startups is pretty vast.
Right. They launch with hype, burn through mountains of cash, and then fizzle out into penny stock oblivion.
That skepticism is totally justified, yeah.
So is this an actual long-term wealth builder or just a gamble?
To see why this might be different, you have to look at their model, which they call space infrastructure as a service.
Okay, what does that actually mean in practice?
Well, usually getting something into space is incredibly fragmented. Right. One company builds the satellite bus.
Another makes the send.
Right, a third brokers the launch. A fourth manages the data. Every handoff loses margin and adds risk.
Yeah, that sounds like a nightmare.
But Sidus operates a 35,000 square foot facility down in Florida.
So they're doing it all under one roof.
Exactly. Custom component manufacturing, assembly, thermal testing, even launch planning.
So it's extreme vertical integration to control costs.
Yes. And their real competitive moat is their proprietary AI ecosystem, Orlaith.
Okay, Orlaith. What is that?
It combines their FeatherEdge hardware with their Cielo AI software.
But, I mean, why does putting a computer on a satellite matter? Satellites always have computers.
Not like this. We're talking about edge computing.
Oh.
Because transmitting data from space is, it's really expensive and slow.
Bandwidth is a bottleneck.
A huge one. Say a satellite takes thousands of 4K images of empty ocean looking for one unauthorized ship.
Sending all that empty water back to Earth would cost a fortune.
Exactly. But if the AI hardware analyzes the images in orbit...
it just finds the ship and sends down that one specific image.
Right, a tiny data packet. Saves massive amounts of time and money.
Wow, okay. But does it actually work?
It does. Their LizzieSat-3 successfully delivered sub-5-meter resolution imagery. They have proven on-orbit heritage.
Okay, the tech works. But what about the financials down here on Earth?
We're seeing early growth. Q1 2026 revenue hit $359,000.
Which is, what, a 51% year-over-year increase?
Yes. Now, they aren't profitable yet, obviously.
Right.
But gross loss improved by 36% to $1.1 million, and cost of revenue dropped to $1.4 million.
They're getting leaner,
Mm-hmm.
but the balance sheet is where the real drama is, right?
Oh, definitely. The game changer is that Sidus is completely debt-free now.
Wow. And they have a current ratio of 3.4.
which means for every dollar of short-term liabilities, they have $3.40 in the bank.
The lights stay on without breaking a sweat.
Exactly. And they got there through a $58.5 million direct offering and a $100 million equity raise.
All right, they're flush with cash. But I have to point out the elephant in the room.
The cash burn.
Yeah, free cash flow was highly negative. Operating cash flow was like negative $5.6 million last quarter.
It's a lot.
They just filled their gas tank with $100 million of premium fuel. But they're driving a truck that only makes $359,000 a quarter.
That's a great analogy, actually.
How do they bridge that gap before the fuel runs out?
Well, that $100 million is designed to fund the aggressive deployment of their LizzieSat constellation.
So they don't have to worry about bankruptcy while they scale.
Right. It buys them the multi-year runway they need to execute.
So if the balance sheet buys time, what actually changes the narrative for the stock?
The catalyst timeline has some major events. First is immediate June 2026.
The Russell reconstitution.
Yes. Sidus is expected to be added to the Russell 3000, 2000, and microcap indexes.
Let's break that down, because index inclusion isn't just about prestige, right?
Not at all. It's about passive institutional funds. Every ETF tracking those indexes is mathematically forced to buy shares.
So the portfolio managers don't even look at the fundamentals. The algorithm just buys.
Exactly. It creates automatic, mandatory buying pressure.
That's a massive structural tailwind.
What else? October 2026 is the big one, the Lone Star mission.
Okay, what happens then?
They fly the first StarVault orbital data storage payload on LizzieSat 4.
Basically, data centers in space.
Yes, because an orbital server is totally immune to natural disasters or physical tampering.
The ultimate secure off-site backup.
Right. And if it works, it proves their subscription-based recurring revenue model.
Turning one-off contracts into predictable cash flow? What about these defense rumors I keep hearing about?
Yeah, there's chatter that they're positioning their platforms for the Missile Defense Agency and SHIELD program.
Using that Fortis VPX architecture, right?
Yeah, it's a heavily ruggedized computing setup for defense. Even a modest contract there would transform them.
I have to urge extreme caution with those rumors, though.
Oh, definitely.
Pricing unconfirmed government contracts into your portfolio is dangerous. Government procurement moves so slowly.
Rumors don't pay the bills.
Exactly. So is October basically the make-or-break moment for their valuation?
If they want to validate this infrastructure as a service model to the market, yes, October is critical.
Okay, so the catalysts tell us what could happen. What is the chart telling us right now?
For traders who, use tools for clean chart workflows, you'll see a classic volatile microcap pattern.
Following that $100 million raise, right, which is priced to $5.08.
Yeah, and the stock predictably slid down into the $3 to $4 range after that.
Which makes total psychological sense.
It does, because that $5.08 level is now a massive overhead supply.
Right, people who bought in there are underwater.
So the moment it climbs back to that price, they sell just to break even.
A massive wall of resistance.
Exactly. Currently, psychological support is trying to hold in the low to mid $3 range.
And we have to talk about the float. It increased by, 19.7 million shares?
Roughly, yes. Flooding the market puts heavy downward pressure on the price short term.
But long term, a larger float tightens bid-ask spreads for institutional buyers, right?
Yes, it makes it easier for them to build a position without causing wild spikes.
Now, there's a weird technical quirk here, too. The negative beta.
A beta of negative 0.97.
Yeah, which means it trades inversely to the S&P 500.
When the broader market bleeds out, this stock tends to go up.
It's like a bizarre speculative hedge, driven entirely by company-specific catalysts.
It really is.
But with all that overhead supply at $5, the stock's just trapped in a show-me phase until earnings improve.
Pretty much. Cautious traders are likely going to keep it contained in a channel until October.
That makes sense, especially given the sheer panic in the space sector right now.
The sector chill is real.
Overwhelmingly bearish after the SpaceX IPO fallout. The retail enthusiasm is just gone.
And it's being compounded by aggressive attacks, like that Fugazi Research short report.
Right, they explicitly called Sidus Space a sci-fi wish burning cash.
That rhetoric drives fear. But you have to look at institutional ownership, which is only at 17.9% right now.
Most large funds aren't even involved yet.
But that June Russell Index inclusion is a massive forced accumulation catalyst that could absorb the retail panic.
But is it dangerous to rely entirely on algorithms? Does being called a sci-fi wish scare away the discretionary buyers.
Passive flows are powerful, but yes, a healthy stock ultimately needs both active believers and passive accumulation.
Which brings us to the harsh realities and downside risks. The cost of that survival catch was massive dilution.
It shrank the ownership pie for existing shareholders.
Exactly. Millions of new slices. And because revenue is so tiny, the stock trades at astronomical valuation multiples.
The valuation is entirely based on future expectations, not current reality.
Which introduces extreme execution risk. If the October mission fails,
Or if there's an anomaly on the launchpad.
the whole bullish thesis collapses. The market is pricing imperfection with zero room for error.
Those risks are significant. But to balance that, you have to remember the fortress balance sheet.
Right. Being debt-free removes near-term bankruptcy risk.
They won't go to zero tomorrow from unpaid leases. They bought the runway they need to actually launch.
So with all that on the table, what's the final verdict?
Based on the fundamentals and massive catalysts, the bullish score is a 6 out of 10.
And the investment rating?
Strictly a high-risk, high-reward entry point.
What's the target horizon?
A multi-year view, 12 to 24 months minimum.
Not a quick swing trade.
No, it requires deep patience for the October Lizzie Sat 4 mission and for institutional flows to normalize post-Russell inclusion.
And we have to explicitly reiterate, this is not financial advice. We don't tell you what to buy, sell, or hold.
Exactly.
This is strictly for investors comfortable with extreme volatility and long-term speculative execution risks.
Always do your own research.
And as a final reminder, if you want a cleaner way to read the trading charts, check out VIP Algos through the link below in the description.
It's a TradingView suite with visual buy and sell alerts, trend tools, support and resistance, and TPSL areas.
But it's strictly an educational tool, not financial advice, doesn't place trades, and doesn't guarantee results.
Trading involves real risk. And again, this is an affiliate link. We may earn a commission at no extra cost to you.
Right.
If this deep dive helped clarify your market view, please subscribe, like, and comment. We'll see you in the next one.
And here's a final thought to mull over. $100 million buys a lot of fuel to build satellites. But as orbit gets crowded, will the real generational wealth go to hardware companies or the ones who monopolize the data coming down? Hardware gets cheap. Data only gets more valuable. Keep your eyes on October.